Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
There are two very important things which we need to cover today. One is India's union budget, second is the trade war by way of tariffs that is ongoing. Both very important, so let's get right into it. Good morning, JK. Break down the budget and this tariff war that is afoot.
Good morning, Swaraj. This must be one of the busiest weekend for Indian economy and market watchers, and also the busiest start to a week in the global markets. So the weight of the events that we have gone through in the last 3 days is so high, that we are seeing moves everywhere, every minute, and let's try to update ourselves as much as possible. First of all, it was the Indian budget on Saturday, and the finance minister made a departure from the approach that they have taken all these years, focusing on infrastructure and capex to drive the growth. But this time, while the emphasis on infra and other capex is still continuing, not as much as the market expected, but they have definitely decisive shift in focus to consumption, because the government has been aware of the inflation that has been ongoing for the consumption, the growth slowdown that it has resulted, and also perhaps the wealth erosion effect that has happened due to the recent fall in the stock markets. All these have eaten into the consumption, and growth is also getting affected. So they have done bigger than expected relief in the tax for the middle income groups, and it is also applicable to across the board income earners, which is quite substantial. So that is expected to definitely give a boost to consumption. Of course, the estimates of how much the growth can show up increase is definitely varying, which between 7 to 8% is the debate is ongoing. I think it is still too early to say, because the implementation itself will be from 2 months from now, and then we have to see how the inflation pans out, because of the so many things that's going on in the global markets. Apart from this relief for the taxpayers, I think government has seen a good focus on all the key areas. The areas that stuck me was the focus on MSME, who have got good support through higher credit guarantees, and also the limits of definition itself has been a big relief for them. And then, of course, agriculture, which is a key for our economy. FDI has got a boost through insurance, opening up for 100% participation from the foreign investors, innovation, education, and urban development, and transport also, and not leaving aside the technology part, that is the AI. So I think budget has been quite comprehensive. There could have been some disappointment about the lesser than expected investment in capex, but that I think market has reconciled to it. In the end, the budget should be seen as good, but to see the positive impact of the budget, we really have to wait and see, because it's really overshadowed by the global events. Because on Saturday, the tariffs from US under Trump 2.0 became a reality. Mr. Trump signed executive orders imposing 25% tariff on Canada and Mexico and 10% on China. So this threat has been around for some time, but market has been speculating that it could keep getting postponed under the guise of negotiation from these countries. But actually, that was not the case, and actually, they have become a reality now. Immediately, there has been some retaliatory tariff from Canada, up to 25% on imports from US, and Mexico is taking a measured approach and probably not declared anything so far. China has announced that they will come out with a retaliatory, and they have also made a statement that these do not help either of the parties. So markets have taken this thing on their chin. Dollar index has moved up by over 1.2%. Euro has come close to its the cycle low at 1.02. Chinese one pushing against 7.36, and more so the stock markets, be it Japan or Australia, Korea, or even Taiwan, all of them have lost between 1.5 to 3.5%. It's definitely something that we should expect, because it creates a lot of uncertainty. Supply chains are going to get affected. Global trade is going to be getting affected if it continues, and the inflation is not to be discounted as well. And so we're still assessing how exactly this will impact the inflation and growth in US itself. But if at all there is some silver lining, most analysts also feel that these tariff measures are not going to help either of the parties or either of the countries. And maybe even though they have already imposed, Trump may still be open to some negotiations, because some news indicates that Trump is going to meet the Prime Minister of Canada. He's also going to meet the leader of Mexico, and we have already heard earlier that he's going to meet Mr. Xi also. I think that's where the market hopes, but I think it is now too late, or rather it's too presumptuous to think that these could be reversed and the market will go by reality rather than speculation. Therefore the markets will remain under stress. I think dollar index very likely to test 110, which means that euro can go to below 1.02. Dollar yen has been not rallying much, because it's a risk off sentiment. Risk off is really showing up now, because as stock markets, including Dow futures and S&P futures, fall more a lot, we are seeing profit taking in assets which have done well recently. Cryptocurrency is down by 5%. I'm talking about the Bitcoin, which is down by nearly 5%. Gold is also taken a hit of about 1% from the peak. Perhaps this could continue if the global markets continue to fall. And of course, the rupee has not really broken into new ground much, just marginally above its all-time high of 86.65 as per the offshore quotes that we are seeing right now. But really, we have to really wait and see once our onshore market opens, because whenever there is a gap up, there is some sort of action from RBI that has been seen. Whether going by global market scenario, RBI will keep itself away from intervening. If that is so, then dollar rupee can also see 87 levels being tested. Now, while all this is going on, the key data from US and Eurozone on Friday, that has been really pushed to the background, and really that has not really had much of an impact. See, the PCE core inflation in the US came higher. Of course, they came higher as expected. Only core year on year came somewhat lesser. That was also as expected. I mean, it came steady at 2.8% as expected. So nothing much to take away from these. But then higher inflation number, though expected, is something that cannot be ignored. So I think this justifies Fed's stand of keeping the rates steady for much longer. I think a market is once again speculating that there may not be more than 0.25% cut this year. Now, all this, as I said, will be overshadowed by what is happening in the trade war. So if that intensifies further, who knows, the Fed may be forced to hike as well. And then that is based on the fact, if there is inflation higher picking up, there are indications that inflation can pick up by 0.5%. But if it starts to impact growth, that is when we see the Fed possibly revising its stance. So there's a lot more possibilities, many possibilities, how, depending on how the trade wars proceed. But right now we are in the thick of the trade war, and we have to keep an eye an ear to the ground, and completely focused on what is going on. We try to keep you updated as much as possible, because the news is coming thick and fast all through the day, and this is going to be a very busy day for the markets, no doubt. Investors must be hoping that there's some sort of a negotiation, but that I think too much to assume right now. We are now in the bearish phase, definitely for the market. If nothing happens in the next 24 hours to come some sort of a reproach, I think markets are going to slide a lot more, and dollar is going to remain strong for the time being. Meantime, we are also seeing the Japanese yields going up to multi-year high, and that's also significant, because then it's possibly also going to put pressure on the carry trades going forward. So markets are getting hit from several sides, so just keep an eye on those things as well. Meantime, the two most affected countries, Canada and Mexico, their currencies have taken a big tumble. Canadian dollar is down at the level seen 21 years back at 1.4750, and of course the Mexican currency is at 2-year low at 21.25. I think this is not the end of the. I mean, this is not the worst, and we could see much worse. That's how both technicals and fundamentals are indicating. So we try to update you as much as possible. I will definitely be prepared for a busy morning and a busy week.
Thank you, JK. And just themes which I got for India's budget, it was, of course, the focus on consumption. And for global markets, the tariff man is back, and the tariffs have become a reality as Mr. Trump has imposed tariffs on Canada, Mexico, and China. The reaction has been swift. There has been a broad dollar strength. Canadian dollar and Mexican peso has seen a big tumble against the dollar. So market has its focus on the tariffs and how that will evolve. We'll keep you all updated, as JK mentioned, as much as possible. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.